What's going on, everyone? My name is Nicholas Merten here from DataDash, and today is February 3rd of 2025. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I got to do a little bit of a rant and rave. I want to spend some time to talk, obviously, about the crazy price action we've seen not only in Bitcoin, but also in the altcoin market. In the case of altcoins dropping from $350 billion back at the end of January, just a couple of days down to $218 billion. But I want to go ahead and try to explain why this is happening. I want to give you guys a bit of an understanding of how things are likely going to play out over the next couple of days and weeks off of what we've been chatting about for the last couple of weeks here on this channel, and also try to explain the core fundamental reason why what's going on in the world of AI absolutely matters when it comes to crypto. We got a lot to unpack here in today's video. If you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So first off, I want to go ahead here and talk about Bitcoin. As you all know, we've been talking about the same fundamental principles here. There's a lot of alignment with what we talked about back last year when Bitcoin had this really strong initial run up after the launch of the ETFs in Q1 of 2024. Similar here to October, November, where we had a clear change in character, a clear trend forming, the 21-day acting as support constantly time and time again, allowing for real price acceleration. But as we started to enter into December, for the last 2 months here, we have seen Bitcoin essentially chopping at the 21-day moving average, starting to break it in regards to support and starting to treat it as resistance. And when we tried to reclaim it, failing to do so here. This was your warning sign, guys. Essentially, the 21-day has already clearly shown that there is no trend right now, that the bulls have stopped taking charge. And now, instead of holding the 21-day, we're trying to rationalize and hold in the 100-day. It's very similar to what we saw back last year in 2024. Now, the important thing to understand here is that while this drop may not seem very significant, a lot of people are getting affected here. A lot of people, whether they want to admit it or not, are over leveraged in this market. And this is a big thing. You guys know, if you've watched this channel for years, I don't try to promote leverage trading or anything like that here in this channel. I always tell you guys to make sure to mitigate your risk. Unfortunately, there are a lot of people out there who will propagate the narrative that Bitcoin can't go down, the number always goes up and to the right, and that you should lever up to the teeth in order to be able to maximize returns. Well, now a lot of people have unfortunately lost their money. $1.9 billion of longs, practically speaking, have gotten liquidated in the past 24 hours. This is the worst day of liquidations. Before we get anything else, this is the worst day of liquidations we have seen in crypto throughout history, more than the COVID crash or the FTX implosion. So you can thank all those who are, kind of shoving their referral links down your throat from Bybit, BitMEX, all these different leverage exchanges out there, FEMEX, who are promoting that and not giving you any guardrails on how to actually use leverage. The next point I want to talk about here, and this does come still to the topic of leverage, right, is essentially that if we take a look at the heat map, as we talked about for the past couple of weeks, the important thing to understand here is that the exchanges at the end of the day love when you trade on leverage, because it gives them an ability to take money that is yours and make it theirs. How do they do that? Well, they essentially liquidate you out of your positions. And the key thing I want you guys to understand here is that the exchanges, just by looking at this heat map, you could probably guess the direction that they have an incentive to liquidate. They have a massive incentive to liquidate longs. There are a ton of people who built positions during the uptrend, who are up on their positions, riding high right now, who think that 150K, 200K is right around the corner, and are unfortunately going to be victims to exchanges and their practices. A lot of these longs are not going to be safe. As we talked about, there's a very good chance we could come into the $70,000 range, and a lot of those people are going to get knocked out of their positions. This essentially means that exchanges have an incentive to drive prices down here after a relatively low volatility period. They are now making their next move, and it is going to knock out a lot of these traders, which again, as we can see here, as you just climb down here, are billions of dollars in positions that could be knocked out over the next month or so, right? So this is, again, mind you, coming at a time, this is where things kind of get a little bit nerve-wracking, because people say, Nick, we sit here and say that the exchanges can cause trend direction or disrupt price or manipulate it, so to speak, right? No matter what you want to call it. But don't we have MicroStrategy and the iShares or BlackRock Bitcoin ETF coming and scooping up a ton of Bitcoin? And to be honest, yeah, there's some pretty good Bitcoin purchases going on right now. MicroStrategy still coming in and buying about 10,000 Bitcoin every given week here in the week of January 20th and 27th. And we also see iBit not being shy here from accumulating Bitcoin, right? But this is a bit concerning here, because if we're getting this kind of buy-side pressure from the two largest sources of inflows. Right? These are the two pillars that hold up crypto markets that we can hopefully rely on. If these are quite strong right now and Bitcoin's price is acting like this, then we've got a lot of sell side pressure going on right now, right? And again, some of that could be for sure short-term manipulation, whatever you want to call it, right? It could be genuinely that there are more market sellers than buyers, which is really the only way price goes lower like this, right? But my main point here is that it's clearly not enough to satisfy against sell side pressure. So number doesn't always go up and to the right. Probably does over the long term. I'm a pragmatic optimist, but at the same time, there are short-term windows where corrections will knock out a lot of those gains. And boy, and Bitcoin's not really a disaster scenario right now, but if you take a look at altcoins, which we've been talking about time and time again, this is where our specialty is. We are focused on buying altcoins at the right time, and we've essentially been staying away from buying the supposed dip that a lot of people have talked about because, again, this is a repeat of what happened back in 2024. And just take a look here at the last 7 days. Pudgy Penguins down 45%, Melania's meme coin down 40%, WorldCoin, major VC-backed coin, 34% down. Fetch, this is one of the places we like to watch here, down 32%, Dog with Hat, Bonk, all these meme coins, Virtuals Protocol, the AI agents, Marketplace, Arbitrum, Filecoin, Python Network. I mean, just go down the list here. I'm not trying to pick names or bash anyone here. Down more than 30%, 25% over the last couple of days, some down 20%. You're lucky if you're only down like 5 to 10% here, right? Most plays are absolutely just getting crushed here. And the reason this is because Bitcoin is not showing any trend strength. And second off, altcoin fundamentals are just weak right now. And if we take a look at the meme coin sector, down from $96 billion, flash crashing all the way down to 62, more than a 33% reduction. We've got, in this case, the real world asset narrative doing the same thing, 75 billion down here towards 50 billion at the crash lows here. We can see here as well, GameFi down from around right under 21 billion down to around 12.8 billion. And if we just take a look here at others market cap, complete collapse here through the 200-day. In fact, this is worse than what we saw back here in 2024 in March, where we went from 370 billion initially down to 219, then basically chopped within the 100-day. This was an attempt at the 100-day and then just an absolute sell-off here. Now, we haven't come down to touch that 200-week, and I'm going to be honest with you guys, I think there's a good chance that's going to happen. I know we've recovered a lot of these lows here, and I know a lot of people are probably juiced up ready to go leverage long and start buying positions here. But I wouldn't say that now is the time just yet. As you can see here, we have usually on these pullbacks, lots of these capitulative wicks here where, again, people buy what they feel support, then it faces resistance, and then comes back down to new lows. The fundamentals of the altcoin space are not only incredibly weak, the lack of belief in the worth of altcoins has never been weaker than it is now, right? And that's because there are no serious narratives. Meme coins are right in your face. It is hopefully you buy and sell at a higher price to some greater fool, right? And that look, there's nothing wrong with that. I'm a trader at the end of the day, but it went from a couple years back or even just 2 or 3 years ago where we believed that this space was actually going to do something. And as you guys probably remember from my video where I talked about Trump coin, nothing bashing Trump or anything or political wise. But the important thing here is that that is the peak pinnacle of where crypto, especially in the altcoin sector, really is. I'm not here to say Bitcoin isn't some potential valuable asset long term, but if we thought there was any hope that altcoins were going to be worth something, I think the last couple of days and the price action show you that this is purely sentiment driven, and it is purely a clear lack of belief here that there's anything worth focusing on in this industry. It's very sad to say. I like altcoins. I like the opportunity that they can provide and that they've provided me great capital returns over the last couple of years investing and trading in altcoins. But the opportunity might be going away for good here. We've been pretty much neutral since back in February 2024, and that's at the same pocket and range that we faced resistance back here in 2021 more than 3 years ago. Coming up here on 4 years in the next few months. So my main point is that I think, as we talked about for a long time, the multiple opportunity in crypto is just going away. I mean, just take a look at how quick ETH sold off. 0.032 here back on February 1st, down here to 0.23. Oh my gosh. I mean, to see Ethereum, which has already been bleeding I have to move my percentage decline mark here from 66% down here to a total of 73%. Ouch. We've been saying to stay away from, as much as we were big ETH heads back when Ethereum was 80 to $100 back in the prior bull market. We've been saying to stay away from ETH since back in mid 2022, when it's clear we could not formulate a new high. And since then, we've just broken through the moving averages, continued collapsing lower. Maybe now is a time where we could start to find some value opportunity here, because I do like DeFi, specifically if we do see a rebound in crypto long term. But my main point here, I don't mean to just be negative, but I want to really emphasize the severity of this price action. Solana down here quite a large amount as well, nearly a third of its value. XRP, all those people who told you to passively long and use leverage over the past couple months that XRP was untouchable because it was holding on that 21-day and the 100-month doesn't matter, we're going to clear through it, you likely got knocked out of your positions, either stopped out or liquidated. So I want you guys to think here for a moment when you're seeing these charts and you think about all the people who told you to trade on leverage or use their referral link. I want you to think for a moment who those people were and whether or not they really put you in the best position. I only say that because it makes me upset, because people see crypto as this opportunity to make it, right? To be able to really set themselves up financially, right? And I don't want you guys to toss out what capital you already have worked hard for to the benefit of someone else, and all the expense, all the costs coming at you, right? I want you to do well, and I want to make it clear that anyone who's being honest with you probably would have seen that something like this was coming soon. And I want to talk about why that is. This is the big reason. We got to step out of the crypto space for a sec. We got to talk about what's going on in the world of AI and tech, because that is where things are getting really interesting. In last week's episode, we spoke about how the DeepSeek R1 open sourced AI model that came out of China has completely upended the trajectory for AI, and more specifically, the demand requirements of GPUs or graphics processing units, and the future expectations for data infrastructure required to run these AI systems. The important thing to understand is that not only did NVIDIA drop 17% about a week after the release of this AI in a single trading day, but since that decline at the open of the market, NVIDIA has been unable to fill that gap, to essentially recover from that correction for over an entire trading week last week. So why is this the case? Well, it's because the market is slowly coming to terms with the fact that this is going to be massively disruptive for NVIDIA. There is no way you can really spin it here. Now, it is important to understand the nuances of it. In this month's Dash Report newsletter, we wrote about the fact that this is going to have some good things and some bad things. We talk about the actual nuances and details around this that unfortunately a lot of headlines and articles miss. So if you guys are interested to understand what this really means from a market perspective, and of course, you guys can check out the Dash Report. You could always sign up on a monthly basis if you just want to try it out, or you can sign up on an annual basis to get a discount of 20%. But the main thing I want to emphasize here is that this is going to have big ramifications in the short term for the AI narrative. And this is going to have a big impact on the broader technology equities in the United States. Along with that as well, there's also a global trade war that's starting to brew here. We're starting to see tariff wars building up between the United States and other countries. And again, I understand, as with anything political, some people see this as a necessary good thing. Some people see this as a bad thing. At the end of the day here, while I can understand the sentiment around tariffs, I want you guys to understand that the uncertainty that comes from it is going to impact equities in the short term. Again, it could be for a greater good, but we're not here to really talk about tariffs as a policy. We're here to talk about how it's going to impact markets. And these things together, this is the perfect storm brewing. You've got your mixture of headlines, some of which are going to have serious actual ramifications. This isn't just some kind of FUD story. But beyond that as well, you've got the tariff mix in there and continued uncertainty with an equity market that has been pretty much going sideways for about 3 months now, around November to January. So when we take a look at the futures here and we see a gap down like this, and we're coming to spend a lot more time around the 100-day moving average versus the 21-day, and continue to, not rather than accelerating price starting to stagnate, this is the early stage sign of a pullback. Something we've talked about here for are happening over the last few weeks. And along with that as well, we wrote about in the prior Dash report, talking about a Q1 correction. So there is going to be a lot of opportunity to scoop up some stocks, some cryptos, whatever you're interested in, at a much better price over the next few weeks. The question is, where does that bottom come in? And again, we focused on that because what we're tracking here is the important reality. If you take a look at the big equity plays that have led the market over the last few years, really the three titans. You talk about Nvidia, you talk about Microsoft, you talk about Apple. These three companies, even beyond the other like FANG stocks and like other big tech plays, beyond any narrative you can think of, right? These have been really the companies over the last couple of years that have just become behemoths in their own right. Together, the three of them are worth $9.5 trillion at the time of recording. They were worth over $10 trillion back a couple weeks ago. These companies make up roughly at any given time around 15% of the entire equity value of all U.S. public markets. That is massive. Three companies in the S&P 500 make up that much equity concentration. It has never been this bad. Keeping that in mind, if we take a look at the price performance of these three companies, which have a lot of weight in the market and will likely impact and serve as a domino effect for other asset classes, well, we need to understand where that price is going. And if we take a look at Nvidia, Nvidia has been, give or take some volatility, stalling since back in June of 2024, more than half a year now, over 7 months, and is now, for the first time in this entire uptrend, trading below its 200-day moving average. Now, as many of you know, a break above the 200-day is usually a sign for further growth ahead, that we are on a long-term recovery trajectory, we've been through the worst of it, and that the bulls have reclaimed charge. In the same fashion, in the opposite fashion here, we can see that when we break below the 200-day, that is usually a sign of a trend decline. We can see it back here in October 2018, where Nvidia had a steady correction from that point on, from $6 a share down to $3 a share, more than a 50% pullback. And here as well, even though there was some chop, once we had essentially touched the 200-day, you'd be better off selling there and waiting for lows, because if you would have waited around, it would have gone from $22.59 down to $10, another 50% more correction from that point on. Many people thought they were buying the dip at the 200-day, when in fact they were buying the bag. We do not want to do that. My main point here is that we are far extended away from the usual bottoming or accumulation point, which is that 200-week moving average. Case in point, we got a long way to go in Nvidia. Nvidia has been the poster child. It has been the leader in this market. It has been the large cap leading bet in the market, far outpacing most stocks and absorbing a ton of equity value, because people saw Nvidia as having this infinite moat, this essential monopoly on GPU data infrastructure for data centers. But we can see here that this is going to have a domino effect across the other players. Microsoft, since February of 2024, practically going sideways, spending a lot of time in that 200-day, and now having its worst weekly candle here I could probably point to, now looking like it's steadfast for those longer-term moving averages. And boy, do we have a lot of ways to go from where we are now. In the case of Nvidia, that could be another $1.5 trillion in equity value wiped off the table. In the case of Microsoft, another $1 to $1.5 trillion in equity value wiped off the table. Apple as well has been going sideways since back in July, very similar to Nvidia, and now having a weekly rejection candle at the market close below the 21-day, teetering right near that 200-day. The long-term moving averages pointing at valuations that are anywhere from 35 to 50% cheaper from where we are now. This is going to have massive ramifications for equities, and it's also going to have massive ramifications for Bitcoin. This brings it all back here to crypto, because I understand that a lot of people here would say, Nick, okay, whatever impacts DeepSeek might have, it's on AI-related companies, it's on AI stocks, it's on Nvidia, who hope to sell a lot more GPUs, but perhaps those GPUs are not going to be needed anymore. What does this have to do with Bitcoin? And I understand that people fundamentally realize that Bitcoin is not directly impacted, like its security is not impacted by AI becoming cheaper. Its value proposition as this kind of digital hedge is not really impaired by it. But the important thing to understand, and this is something that is, you can take it as my opinion, I'll be honest with you guys, I see it a bit as fact because I've seen how Bitcoin's price performs. But again, we can agree to disagree. If you want my 2 cents on this and why it impacts Bitcoin, it is because Bitcoin is not this risk-off hedge that you go to when times are really bad. Clearly, as things are starting to get worse here and more uncertain, Bitcoin is going down. And we see this time and time again, if we're being honest and actually analyzing the price, not what people say Bitcoin is. But instead, Bitcoin is an asset that does phenomenally well when equities, when real estate, when every asset class is going up, when times are good and optimism is riding high. Don't believe me? Look at the correlation between Bitcoin's price and stocks. In 2021, at the peak in November, we saw equities peaking out, we saw Bitcoin peaking out, going all the way into the fall of 2022. That is when Bitcoin collapsed all the way from its highs at 69,000 down into the depths of 18 to 20K, or actually down here towards around 15 to 16,000 at the absolute lows during the FTX collapse. And I understand there were obviously bad things happening in crypto. We obviously had Celsius, we had FTX, we had BlockFi unwinding. But the thing is that is no coincidence, because that is a risk-off period, and a lot of those bad businesses and a lot of those things that propped up markets go south. People get liquidated, people get knocked out. And the main thing I want you guys to just do is zoom out. Because as we've talked about, if Bitcoin can't hold on this line of prior resistance and make it new support here, then we're likely going down to the 200-day. We're likely going to go down and have at a minimum a 35% correction. And that's not doom and gloom. I'm not shouting to the roof that you should go short Bitcoin or that Bitcoin's going to zero. I don't think that makes me a perma-bear by any means. That just means I'm analyzing what price is telling me. And boy, did we get that right throughout this period of time. We sold our altcoin positions back here in April 2024 with that inconsistency at the 21-day moving average, and we avoided months of stagnation, of uncertainty, a lot of pain that happened during that period of time. A lot of people getting liquidated. And we told people to sit tight, wait for a trend to come. And the altcoin opportunities, as well as Bitcoin, came raging back. There have been opportunities in equities as well that we've been tapping into, some of which have been outpacing the altcoin market and Bitcoin broadly speaking. We're searching for opportunity where it makes sense. And we know not only when to, essentially take upon an opportunity when we see it, but also to not do anything, to sit back and wait and let the market come to you. This doesn't mean that I'm shouting to the roof that we've got a recession on our hands. I'm not here to say that NVIDIA is going to become irrelevant overnight, but NVIDIA, one of the most valuable companies in the world, similar to Microsoft, similar to Apple back in the day, goes through these types of corrections. It is absolutely natural, normal, and healthy in the long run, and gives us great entries, potentially even to buy NVIDIA or other companies like it at a nice discount. When you buy in will make a very large difference at the end of the day here when you are trading in markets. It is the ultimate differentiating factor here because markets usually go up and to the right. Eventually, everyone's going to probably make a return if you just hold out and you don't expose yourself way too much to one company or one bet. The main point here is how you can increase those returns. And that comes from knowing when to get into the market and when to simply sit tight and wait. Because if you don't, you might be caught at the other end of the stick getting the worst part of the deal, losing everything potentially in the process. I ran out a good amount here, guys. My main point here in summary is that we've got a ways to go. I think at a minimum, Bitcoin's coming to the 200-day. I think if we take a look at other coin market cap, that 200-week, I don't see any reason why we shouldn't retest it here. It really isn't that far away, and we got very close to it here. I just think it might take maybe a couple more weeks. Maybe we have a little rebound in the short term. Who knows? But then eventually we roll back over here because the moving averages are just clearly showing it. There's no real fundamental positive belief-driven sentiment right now in these markets. And I want you guys to keep that in mind here. And that's just me talking in the short term. That could change in the next couple of months, right? But for now, we have to preserve and protect our capital. So that's the number one goal. It always has been, always will be. And it's the only reason why I've made it as far as I have after all the mistakes I made in the past. The only way of actually being able to build life-changing wealth is because you have to know not only when to strike, but also when not to. To sit back, relax, and wait for that opportunity to present itself. And luckily, we could be getting there. We could be on the later half here of this correction, but we need to see the signs of it presenting themselves, similar to what we saw back in August and September, as well as October and November of 2024. Have a great day, everyone. Thank you for letting me ramble as always. If you're interested in learning about our thoughts on DeepSeek R1, what it means for NVIDIA and the broader markets in a more detailed fashion, our trade setups, our mid-month webinar, our discussion group, and our alerts group when I make trades, then check out the Dash report down below in the description. It is a great way to support the content here on this channel and what I do. And if you guys enjoyed this video, consider dropping a like as well. Take care, everyone, and I'll see you all in the next video.